The coronavirus pandemic continues to shake up Wall Street with record highs and lows. But what will recovery look like? Will it be a quick rebound like a V or bounce up and down more like a W? Local certified financial planner Tony Drake from Drake & Associates joins us with a stock market forecast. Good morning, Tony.
Great to be here.
So, Tony, stocks took a big hit this spring, but where does the market stand right now?
Yeah, pretty phenomenal hit, right? If we think back to March, fastest 30% drop ever in history, faster than the Great Depression. But in large part, it's recovered pretty quickly. So that type of volatility can cause a lot of jitters for folks in their 401ks, especially for retirees that are about to retire or early in retirement, can be pretty scary.
So what's led to all those ups and downs?
It's really been the coronavirus, right? It was this kind of unknown impact that happened, and it was this artificial pause on the economy that, frankly, we've never seen before. I think, economic students will be studying this for decades and decades to come. We've just never had this time period where we had to completely stop the economy and see unemployment at these types of levels.
We're talking about recovery. We're talking about our shapes, too, all at the end of the alphabet. A W recovery, a V, or a U. What do those mean, and what have we seen so far?
Yeah, I mean, there's no shortage of opinions from economists on what's going to happen. I think, of course, a lot of politicians want us to believe it's going to be a V-shaped recovery. So what that's referring to is just how long does it spend at the bottom and how quickly does it rebound? A V-shape would be the best shape for us. It's kind of what we've seen so far, but there's some economists that think we may retest the bottoms or drop again. That would indicate a W shape where we go back down. Good news is Congress is back in session this week. House Republicans are saying we may see a bill in early August, so that would really help push that economy back up.
With the unknown, what should investors be doing with their money?
It really comes down to having a plan, right? It can be very scary to invest in these types of time periods. At my firm, Drake & Associates, we believe in the education first. So you want to make sure you're contributing to that 401k. Even when the market's down 30%, it can be a little nerve-wracking to put that money in. But think about if your favorite purse or sporting equipment or car was 30% off, you jump on it. Same idea here. You want to keep investing. That's a great opportunity to buy at some low points.
You mentioned earlier people that are looking at their 401ks, maybe close to retiring. We also had a story earlier today about how a lot of young people are getting involved right now. Is it a good time for young people to get involved?
Boy, it's a fantastic time for young folks. I can't encourage people enough. This concept of time value of money. I have a lot of clients that have seven figures saved for retirement. And I think the assumption is that many of them were very highly paid or inherited a lot of money. Most of them just started early, lived within their means, and prioritized their savings.
All right, great advice, Tony. Thank you so much. Appreciate it.
Thank you.